$105,000 right off the all-time high. If we hit an all-time high during this session, let me know, as we'll be covering obviously not only Bitcoin, Ethereum, Cardano, Solana. We're definitely taking a strong look at traditional markets, what's going on with the NASDAQ, what is happening with the macro. Just want to jump over here and look, we were looking January 13th. Bitcoin monthly, not on the monthly time frame, looking at a month's worth of bars over here. You could see as price is jumping up after taking out this liquidity, said, you know what? It looks like we may have just triggered a spring. If so, we are on our way up into February to new all-time highs, and it is going to be a spectacular February. Here we are right now, things transpiring a little quicker than anticipated. By the way, this is Jordan with Conquer Trading and Investing. If you're new here, welcome. And if you're not, welcome back. We're going to be taking a look at upside price targets. Obviously, right now, from a risk standpoint, that low, you can see right over here, that wick low over here, grabbing liquidity. It looks like it potentially is going to be the low for some time. No, we haven't made that new all-time high yet. We are headed towards Monday, the inauguration of President Trump, who is making it known that he is going to be Bitcoin and crypto friendly. Right here, it looks like seasonalities are aligning with a lot of goodness. We'll just say upside price targets, but let's take a look at it really briefly over here. And we're looking at structure. All these lines are structure. You can see the low over here from November 2022 and January 2023. You could see the high over here in October 2021 and November 2021, or you could look at the March, spring 2021 and April 2021, and they all tag that structure. It's just the structure of the market. That structure goes back all the way to actually inception, but it's very clear ever since Bitcoin exited the hype phase, ever since 2013. For the last 11 years, this structure has provided pretty strong awareness of what we're looking at. I just want to briefly look over from this view that we've been looking at. We can say, well, Bitcoin looks like it is very sustainable as long as it remains within this channel that it's currently in. It could break to the upside and it could break to the downside. And if it breaks to the upside, more than likely, then we're seeing a heated momentum stage, which is going to lead to probably and likely higher immediate prices, but then could lead to a cooling off period. If we see a breakdown to the downside, that's a big technical breakdown, and we probably are looking at time-wise a lot longer before the trend resumes. If we stay in this channel, and the longer we stay in this channel, I like to think it's much more sustainable. I hope we stay in the channel. Either way, we'll be checking what's happening. If you look at the top of the channel and you come into February, February being the second best month, seasonalities for Bitcoin, you could see that the top of that channel would be somewhere. That's at the beginning of the month. $150,000 Bitcoin right around the 2nd of March in that area is on the table and potential possibility. What does that look like from our standpoint over here? You can see this area that is highlighted yellow because that's where we see some pretty strong resistance. We wicked down below it over here. That's this pocket over here. As I move towards that same period, it gives me the indication of somewhere around $138,000 to $150,000 Bitcoin. How do you like them nuggets lining up? That's pretty neat. So that is the top side target that I'm looking at coming into, guys, it is the middle of January. We're talking about the next 6 weeks, the end of February. It's not just because we're talking about what upside targets are, does not mean that we're saying that is going to happen. That just means if that were to happen, that would be well within range and meet our expectations. Now, we could also see that, maybe we make a double top and we could take out the all-time high over here and hit that red line over here, that structure. It's still a double touch. Even if you hit to 114,000, I know it's not the same level horizontally. But from my view, that would be like, that's a little bit concerning. That's a double top. And have you seen that before? Yep, double top. Double top. What are you talking about? That's not how TA works. You can't. What are you talking about? It doesn't make any sense. One touch trend line? What? Listen, we do things completely different here. There's nothing else like it. Or no one else out there. Well, a lot of people have actually adopted our style across the board, and that's beautiful. That's what we're here to do. We're here to change the game. We love that. So that would be concerning if we touch this line over here around 114, 115, the red line over here, and then were to maybe like expectations of what Trump would do in the beginning of his presidency when it comes to Bitcoin was, almost like underappreciated, market not responding well and selling off on it, sell the news type event could definitely happen. We're always watching for breakdowns. Right now, it looks like we've put that low in over here. We'll see if that remains. And that was, if you're not following on Twitter, in the description below, you could find a link to go ahead and follow out on the Twitter. Did you see this chart? We're looking at this chart today, and this chart is so amazing looking. You're looking at gold versus Bitcoin. And what I'm looking at over here, obviously you could see from multiple angles, whether you're looking like at this downward slope over here, right? Now, if at any point in time you were to see a return to the gold standard, maybe you would see a breakout to the upside. You could always see a breakout to the upside. You always have to watch your risk and be aware of your risk. But what I'm seeing right here looks like a very clear breakdown, and then breakdown, retouch, and right now looking to resume down. This chart is so amazing, and it looks like good night, game over. Someone check on Peter, is he okay? And it looks like that Bitcoin is right now continuing to eyes on gold, and not just gold, eyes on gold's market cap, eyes at becoming the top asset by market cap. And this next leg down, this breakdown on Bitcoin against gold, looks like Bitcoin is going to continue to play some catch up. It's not written in the stone. Like, anything could change at any point in time, which is why we show up every day. We put the work in and we try to stay ahead of it. If you enjoy being here on this Friday, if you're watching this out on the replay, do go ahead and smash that thumbs up button. It really gets me excited, puts me in the flow, and much appreciated. Bitcoin here, $104,000. We saw a huge amount of inflows back-to-back days, now making up for all the outflows that second week of January. You saw roughly, let's say $1.1 billion out of Bitcoin, and now you're seeing $1.4 billion into Bitcoin. And that right there is beautiful to see. I imagine after today's price action, after today's, nice extension, that you're going to see, let me check out the daily time frame over here. Get off the 3-day, and you can see that it looks like likely, again, as we normally see on those big expansion days, we see more funds flowing into Bitcoin. I just wanted to point out yesterday, I was given the heads up about Coinbase moving towards Bitcoin-backed loans and throwing out that caution. And just want to throw out something else there. It appears that this is also a taxable event if using Coinbase's offering, because they're using the wrap, right? They're using Bitcoins want a Bitcoin-backed loan. Why sell and incurring taxes if you could just borrow? But Coinbase offering is a taxable event because it is being wrapped. I can't figure out. There you go. BTC. When you initiate the loan, your Bitcoin's converted to a wrap BTC. The IRS considers that a taxable event. Be very wary about borrowing against your Bitcoin. It is a volatile market. We're heading into a point of time where potentially this is the most difficult point of cycle I'm talking about now the overall markets, and everything is connected as we are in the point between balance sheet runoff still continuing, QT still in effect, and the rate cuts have begun. This is the most difficult point of cycle to get right. And don't forget, the US has over $7 trillion of debt they need to roll over in 2025. Do not risk your Bitcoin. Trump plans to designate cryptocurrency as a national priority. Executive order expected to create a crypto advisory council. It seems like a lot of information has been posted. Everyone is aware. So it seems that, like, I mean, it looks like there's room for upside surprises. Let's see if he's able to deliver or not. Bitcoin bull runs over here, continuing to hold open position, well into profit, 56% open position. It's on the 8-hour time frame. And I want to go ahead and just jump over here and get into a little mechanical and discretionary look at what's going on with Bitcoin, Ethereum, a long, deep look into Ethereum, Cardano, and Solana. Right now, we're holding open Bitcoin trade 5% into profit, and an open Cardano trade 5% into profit. Let's take a look over here. I don't know. I don't like when my resources get stuck like that. Let me go ahead and just run just hang out. It's Friday. It's Friday. Let's see if we can fix that a little bit, right? Happy Friday. Ethereum, Bitcoin, by the way, I had it stacked below. I don't know if I got it stacked now, but we'll visit that as we look at Ethereum. I think I have the chart pulled up. If I don't, I wanted to pull it up in relation to the tweet I pulled out when I talked about this time of cycle. I expect that Ethereum that Bitcoin makes another low versus Ethereum. Some people thought that was the bottom, but we'll talk about that later. That's not so important. XRP and Cardano, and they all seem to be, Solana seems to be pumping a little bit here in relation to the potential, I hope, of a USA centric strategic reserve. Anyway, we'll figure it out as it happens. Let's look at the charts though. And all of our 8-hour Bitcoin models right now, whether it's the original CTM 2.0, the buy side only, right? They all took the same entry. They're holding the same position, BT7, 108, and 107. This is our discretionary view, our discretionary trading. And the last entry that we took was right over here, right around $96,000. That trade right now rolling into profit. And it's time to go ahead and just take a look at that stop loss where we initially had it all the way down here, right, on entry. And at this particular point in time, it's time to go ahead and lock in some more profits. I'm going to go down to this wick down, and we're going to keep it going down like this now. So this would be the area that we look to exit this trade. This is now, we're talking about the potential of in this year, 2025, looking at our mechanical edge, right? You could looking at this is buy side only on Bitcoin, and you can see that tremendous returns versus drawdown. Tremendous returns versus drawdown. We want to see if that we could improve upon it, maybe using a hybrid. For example, this entry coming in over here at 96,000 compared to the entry that we took over here at 99,000. So you could see the difference between, it's 3% over the course of the year. That could really, really add up. And you can see right now, for example, the stop loss. And then we know that this model is really good on Bitcoin in locking in profit. So this is going to lock in profit more likely than not here. But you can see that our discretionary stop loss is now 98,000 above the 96, $348,000 stop loss here on that model. So this is something that we're going to continue here with Bitcoin. And now, as of today, also include on Ethereum. And let me just refresh these pages as we're talking so that by the time we get there, They're good. They are good. Well, we'll just deal with it. It's all good. So here's a look at Ethereum. And Ethereum just took a stop loss. This page is going to load right now. Ethereum just took a stop loss. And that stop loss has now, you can see that, put us into strong drawdown, 30% drawdown. And you can see the amount of stop losses in the row is quite significant. Look at this. This is now the most stop losses since inception on Ethereum. And we have, I'm going to count them out here. We have 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11 stops in a row. Now, those who have been here know that when you see that type of behavior, it's mentally exhausting. I mean, come on. But it also means that we are more than likely ready for a really, really big move. Nothing's guaranteed. It's always what has happened when you see a coil like that. And you could see, I want to look at this first. You could see that Ethereum, right? Let's just suppose it were able to break out of here. Now, yeah, it's true right now. Let me just even zoom out a little bit. Right now, Ethereum, this is Ethereum's hype phase. Yeah, Ethereum's going to be the next world computer. And now we're in facing reality phase. Move from proof of work to proof of stake. We have competitors out there. Solana, much cheaper. Is it taking away market share? Is Ethereum going to make it out of here? And you could, I mean, no one knows, but if Ethereum does make it out of its facing reality stage and is here to say, and what could be the cause of that? Could it be, there's so many things, right? Like maybe its competitors die off. Its competitors could get stronger. Maybe you start seeing a large adoption by institutional funds come into Ethereum. Right now, that's not what we're seeing yet. But ever since Gary Gensler stepped down from the SEC, we have been seeing much more money beginning signs of coming into the ETFs. Nothing like the $37 billion that's gone into Bitcoin this year. But at the same time, we are seeing a significant trend change. That's something that could cause the future, adoption of Ethereum, even just from an institutional perspective, could cause it to go ahead and move out to that next phase. But it has been, don't forget, it bottomed in June before Bitcoin, which bottomed in November. It's bottomed first, and this whole bear market has basically coiled a lot better than it did in its previous bear market versus Bitcoin and versus the US dollar. And usually those tight coils, they lead to huge expansions. Likely by the time that Ethereum has been written off by everyone and is out of favor is when it's going to be able to make its move. I think it'll make its move from a TA standpoint. It right now is in a descending triangle, which is normally a bullish continuation pattern. It's got the right slope, right? These things could break down sometimes first and then break out of the channel. And that's usually the bottom. But if it breaks out over here, it looks like it should be tracking new all-time highs so pretty soon. And that could be that one trade that makes up for that string of losses easily and puts us way ahead. Now, we don't know. Nothing's for sure. But here we go. We just continue managing risk, waiting for it to come into market. So we had observation, OG villages. Most of the Ethereum trades that result in losses have been stop losses getting hit. Wondering if we should go back and back test with different stop losses. Maybe we're not allowing enough room for the normal market fluctuations, or maybe even reduce the stop loss to 2.8, which back tests better since 2018. I know we have solutions on V3 coming soon with ATR and all, with money management on top of V2. But maybe in the meantime, and it's a great thought process. I'm going to leave this bookmarked up here so that we focus on this during our work sessions and take a good, strong, hard look at it. At the same time, we saw that Brownie Brown had also just put this together. And he's, by the way, just for some history, since like CTM 2.0, this is CTM 2.0, ever since the summer of 2022, there have been no changes to this. This is just running forward tested in the wild live. I had the date up there right there, right? I guess I was looking for it since inception. Since Ethereum's inception. It's a pretty good return. It's a pretty good drawdown. Forward tested live, by the way, 2022. And I mean, okay, pretty good. It's still going, right? Ethereum here, CTM on X, built on top of CTM 2.0, which has now been forward tested for 18 months. You can see now we're coming into its largest drawdown during this period, which, you know what, has been tough. It looked like this was a great entry. It didn't catch foot. Huge sell off, getting ready to get back into the market here. We're going to look at stocks. Tesla is on the verge of a pending buy order, and we'll see if that's still in right now. But we got to focus here on Ethereum and finish the Bitcoin and crypto before we get into traditional markets. We out of all of our templates since the CTM 2.0, 0 changes. CTMX, we've had 1 change on the stop loss. I'm sorry, I rewind. The only change that's ever been made on CTM 2.0 was the stop loss on Ethereum buy side, which was reduced drastically for forsaking overall net profits, just for really that comfortability. And the only other change that recently has been 2 changes that have ever been made to any of our mechanical systems since they've become preferred templates. The other was on Solana. We'll talk about Solana in just a moment. Now, what Brownie Brown is proposing over here is just taking a look at Ethereum on X with and without the ST2 filter. There is the potential signs that the ST2 filter, because this is the change that we made to Solana, taking it off, that during, let's say, more hype phase price action, that the ST2 filter is wildly, let's say, beneficial. And then as we continue and move on, maybe it's not during more like the price action we've seen ever since 2018. So that's something to think about going forward. He looked at the overall performance of Ethereum with the ST2, and you can see large numbers, 243 million with a 30% drawdown. He looked at it without, and you could see the overall performance is definitely put down a little bit, but the drawdown is significantly less. This is full history. Now he goes back and he looks at Ethereum performance pre-2020, and this is with at the standard here, 1 million%, good drawdown, 14% drawdown. This is pre-2020 with the ST2, without it, excuse me. You can see a less of a performance, and the drawdown is actually a little more. Now, this is pre-2020 in more of that hyper phase price action. He then looks at what it's like after 2020 on Ethereum with the ST2, and you can see the 22,000% return with that 30% drawdown. Without the ST2, you could see the same return, a little bit better, but a much better drawdown, which is what we're concerned about. Our returns are so high that we're always concerned with the lowest drawdowns possible. So this is something really to consider. I know OG was talking about maybe just revisiting the stop losses and making sure, and I think that's warranted. And at the same time, maybe it's warranted, and we do have V3 to come, of course. But while we're here on CTMX2, this could be a quicker, immediate adjustment if needed. And I think that we should look at without ST2, and also at the same time, because Brownie Brown's already done the work here, giving us the with and without, but adjusting the stop losses as well. This is since 2023 with the ST2, 57% return, 30% drawdown, which is horrific. This is our worst performing model. Horrific, right? And you could see without it, 120% with the 18% drawdown. That's getting it done, and that's acceptable. That's great. That's good, especially for the worst performer here. So this is very interesting. He said he started forward testing this in November 2023. Very interesting. He then goes into Ethereum on 2.0 was able to catch this trade, and this last trade over here, and the ST2 kept Ethereum out of it. So here's Ethereum on that, didn't participate in that upside. And let's see without the ST2, you can see it would have been participating. And there's the difference right there on CTM 2.0, which CTM 2.0 just uses the CTM filter. It's the only filter it uses. We added filters on CTMX, and that's the difference of why. So he then gets it. I'm confused about this part. So I don't know if I need to go further right now. I'm confused about this part here, because we're talking about Ethereum, but we're looking at Bitcoin bull markets. So I'm going to check in with Brownie Brown, and we'll continue that line of thought next week. This is enough for today's session, and very, very important. And I think that what we need to do here, off of building off Brownie Brown and OG together, is look at ETH without ST2 and look at those stop losses. And we'll see how, in the long run, by the way, this last trade on Ethereum, until then, and we've looked at the performance of each, and they're almost identical, right? But the thing is that this last trade put it ahead. Eventually, my belief, even though we missed this one trade here on Ethereum on X, that likely, see, this is the overall performance, right? And you can see that CTMX is well outperforming, even missing that one trade. I guess looking back from 2020 till today, CTM 2.0 just might have overtaken the performance on X. But overall, X is a wildly better, even with the extra filters. Let me just go ahead and take this off just to compare the performance overall. This would lose some, but the drawdown is so much better. So this needs to be continued to be addressed, worked at, and looked at. Definitely. I just wanted to pause here 1 second. This is really important. I think this encaptures what we do at CTM. So I want to share that with you. By the way, this was shared with me. This was just shared with me yesterday. And this is amazing because look at the date of when a friend request was sent. It was July of 2022. And then there's no message to 2025. 3 years later, Jordan, I don't know how often people express thankfulness for everything that you do here. So I want to take a moment and just do that. The consistency that you lead with and the pure signal is unlike anything else. I thank God often for letting me stumble upon this community back in 2020. I've said this before when my interest peaked in investing. I used to watch 20, 30 people a day before narrowing down my content and community down to CTM. I would be lost in the noise without you and the CTM community. A regular person with a regular job, you have made a considerable impact on my financial state and confidence. Anyway, I just wanted to take a second and express my gratitude as well as encourage you. Thank you, thank you, thank you, so that you will do, so that what you do here makes a tremendous difference in the lives of your community. And I'm so grateful that he took the time to share that with me, because knowing this is truly rewarding for me on a personal level, and inspires me to take us beyond anything we have dreamt for. It gives me that really motive of making a difference in people's lives. Is, look, I think this is one of the ways, though, that really and truly day to day that the inspiration takes place. I want to share this with you. This video here is about 46 seconds. Let me reload the page. No, where's my video? There we go. There we go.
Authentic and useful, and found specific things to be more authentic and useful, and hence translate better.
Well, I think in general, people don't like to be told what to do. Yeah. So the best way that you could inspire someone to do something is through the way that you carry yourself. And if you act in a creative way in the world, and you do it to the best of your ability, and if someone else recognizes it, it might inspire them to do the same. So I think it's hard to teach someone something that we don't practice. We have to practice it.
Yeah, that's the hardest part.
Yeah. But it's also the most fun. It's like, and it's our purpose.
I think this really captures so many of the things that we do together here in CTM. And Bakanet's right? Like, this is, the markets is one of the very hardest, most difficult things that you could do. And imagine, we're called conquering the markets. Is that hubris? It's not. Look at what we've done. Look at where we've come from. Look at what we're doing, and look at what we're going. Absolutely extraordinary. Let's take a look at this from a discretionary standpoint, where we'll come back to this. We'll do this at the end. I'm going to do discretionary TA on Ethereum, on Cardano, and Solana. First, let's take a look at what's going on here with the markets. NASDAQ, after yesterday, CPI gains off the CPI, strong gains, giving back about 50% of that move yesterday. And then ever since the open, it has so far been up only. You can see that we are breaking out and above and validating a potential Wyckoff distribution that was potentially taking place. Check out this, though. When we came down off of the lows this last week, Wednesday, Thursday, Friday, you could see that we traded under that level on a wick basis. We held, and there's nothing easy about it, but we did hold. More importantly, now we are breaking out. Looks like we're going to close above not only that channel resistance, but this pink line resistance as well. You could see the 1 touch, 2 touch of resistance, support, again over here, resistance. And that would be a nice breakout, except it's never easy. And you could see that we're right into resistance from this view right here, right now. So until we clear above this 1 touch trend line above, which is right around here, just around the psychological 22,000, we're not out of the woods by any means. Nevertheless, looking very good here. We're seeing a version of the yield curve, and hey, this may be signals that, you know what, call that potential countdown to the recession off here for a moment. Are they going to be able to pull off a soft landing? Are they going to be able? They've only done it 3 other times in history. Are we now headed towards the roaring 20s, or are we headed towards a massive market crash, setting up actually right now in 2025? U.S. government faces the task of rolling over $7.6 trillion in debt maturing in the next 12 months. That represents 31% of all outstanding U.S. government debt. Are they actually engineering a crash in order to be able to go ahead and roll over that debt? Maybe, maybe not. I don't know. We'll be watching for it. Maybe what they do is instead they just roll over most of that debt with really short-term duration until they have the chance. But we're always watching for technical breakdowns in the market. We continue to watch, but we also at the same time need to continue to stay on the right side. As of yesterday, the stock market was on the brink of extreme fear again. Extreme fear. And you can see from a positioning standpoint, bulls have like just folded in fantastic fashion, just folded. You really see that. We saw that in the third quarter of 2023 before the markets pumped huge. And here you can see bears getting a little bit frothy, but well in control. It was really the bulls that gave up. I want to share some of this with you over here. This is Trump's Treasury Secretary. No tariffs across the board, and a weak dollar. It's our opinion. It's my view that, and I think it's pretty clear that Trump is using tariffs as a negotiating tool, as a negotiating tactic. It doesn't mean that there will not be tariffs that are actually placed. There likely will be to a certain degree. We're not looking for blanket tariffs. This is a negotiating tool to get things that he wants. Awesome. So a couple of things that I want to talk about, though. We find it unlikely that across the board tariffs, as currently reported by the media, we are entering a situation potentially where we do have the media working against the interest of the president. So you got to be careful of what we hear, and we got to get back to that CTM 2020, 2021, learning how to interpret between the lines. I doubt that we're going to see across the board tariffs as he's trying to fix the immigration crisis. The tariff gun will always be loaded and on the table, but rarely discharged. Why everyone expecting a strong dollar is wrong. By the way, we called yesterday. This was just for those that were not following and watching a brief. Originally over here as the Fed cut 50 basis points and people thought that the dollar was going to weaken and that bonds were going to go bid. We took the other view on this breakout that occurred. We then went ahead and exited that trade right over here. Massive trade. And then we re-entered the trade on this breakout over here, exiting yesterday on the breakdown. Look, we might have gotten Stanley. We might be ahead of Stanley if this continues down over here. Let's see. Eventually, we'll be as sharp as could be. We're watching now for a resumption upwards, and we're just starting with this conservative angle right now. As price action progresses and there are further tests, we'll reevaluate to market. Right now, we're still in this huge sell-off on yields. The trend could continue. This is the earliest opportunity here for being on the right side. Let's see how we do. At the same time, we were watching for what that would look like with the dollar. This is when we went long the dollar as the Fed cut on that trend line breakout, and we are way ahead. Yesterday, we were looking for a potential entry, an early entry. I think I might have to readjust that now. It didn't trigger, and I think I'm going to just give it a little bit of room now as the dollar is bouncing over here. If we would have saw that follow through, it would have been a strong indication. We're not seeing that follow through. We're just going to keep this over here as the first indication of a sell impulse taking effect. And there might have been something else. All right, we'll take a look at stocks. You can see right now, let me just refresh that page. I wanted to bring this up yesterday in the Discord. Fire was talking about all eyes on the Japanese yen. These markets are all connected in so much as you can see that you saw the 10-year putting in that sell impulse. You can see the same. This is a bearish continuation pattern, by the way. It's a wedge. If it breaks down over here, it could be strong. That would also mean probably dollar actually selling off, weakening, and also bonds going bid. I know everyone now is telling you that bonds are in the second. Look, we were as early as possible on that sell-off. So was Paul Tudor Jones. So was Stanley Druckenmiller. Aside from that, come on. Everyone's talking about it after the price rise. This over here, fire, bringing us our attention. Bank of Japan meeting next week, next Thursday. Potentially, they're expected to raise rates. And there's talk that in 2025, they may go as high as 1%. So we could see a continuation, a revisit of that Japanese yen unwind, or maybe most of that trade might have been unwound. And maybe we see, if we get a big technical breakdown, also the dollar beginning to weaken, and also bonds going bid. And it matters for us. Let me just jump down one more. We're watching and looking over here at the bottom. You have the dollar. You can see that as the dollar makes the sharp rise, bear market Bitcoin. Dollar sharp rise, bear market Bitcoin. Bitcoin bottoms, dollar starts consolidating. Even though the dollar consolidates and makes a higher high, Bitcoin is rising slowly up. As the dollar begins to weaken, that's when Bitcoin really begins to run. That's what we're waiting for, watching. You can see as the dollar consolidated, hasn't made a new all-time high, and it may or it may not. It's taking out the range high, took out the range high over here. And you can see during that time, Bitcoin bottomed, rising along with the dollar. But as the dollar eventually comes off, that's when Bitcoin should begin to run much harder. It's why we're paying so close attention to the dollar and what's transpiring. And now we can come back over here. Tariffs are inflationary and would strengthen the dollar. Hardly a good starting point for a U.S. industrial renaissance. This is what the Trump administration is looking to do. Weakening the dollar early in his second administration would make U.S. manufacturing competitive. A weak dollar and plentiful cheap energy could power a boom. Boom, 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 boom. It's a taco. The current Wall Street consensus is for a strong dollar based on tariffs. We strongly disagree. A strong dollar should emerge by the end of this term if the U.S. reshoring effort is successful. By the way, we have no expectations. We just want to be on the right side. We follow the technicals. It's entirely possible that the dollar does, before we see any technical breakdown that we're looking for, it could tag as high as 120. Upward slope and trend line going back all the way to 2008, the birth of QE. That would not surprise us. That would not surprise us. We're going to throw that in there. However, at the same time, I see potentially, we saw bonds, major signal, and we're close to the dollar maybe doing it. It hasn't triggered yet. A strong dollar, is the U.S. market posed for a substantial setback after the election? Well, at that point, our rejuvenation and roaring 20s thesis would have been made clear, or there could be a substantial pullback. We just don't know. That's why we each day put the work in, stay and follow the technicals to stay on the right side. And then, of course, we have our mechanical strategies to make sure that we do that. Right now, across the board, we are in a massive position in power. After FNGU this week, closing that last trade, 24%. The trade before that, Tesla closing 46%. Out of the market here, Tesla looking to enter back into the market. And that's a beautiful thing. 100% in cash during this last pullback, as markets had that uncertainty, as you saw market participants go into extreme fear, locking in profits, 100% in cash, waiting, and like, in a snap of a finger, we could be allocated back 100% into the market. Imagine that modeling. Absolutely beautiful. Let's jump back. Let's take a look at what's going on here with Bitcoin. From a discretionary standpoint. Well, if you manufacture goods and then you're trying to sell them, it's a global economy. You're trying to export them and sell them around the world. If the dollar is strong, it's too expensive. No one in Europe is going to buy anything from America if it's too expensive, right? And around the world. But if the dollar is weaker, at that point, it makes the goods you're selling much more competitive. All right, let's take a look here. And what we're trying to do now in 2025 is see if we could get some type of hybrid. I mean, to continue to sharpen our discretionary skills, and at the same time to see if that leads to any type of improvement on our mechanical strategies. So I'm looking for where a conservative trend line break would be, and that's definitely up over here. I think we're late for looking for what an early signal would be, and I don't know that I would have been able to execute like that at all. So we're going to start off from where we are, which is fresh, and then each session will continue and add to it. And then we'll check that with the entry as we did on Bitcoin. We saw that the last two entries we took on Bitcoin, discretionary, would have led to an earlier entry on our mechanical strategy. So it might give us a boost of 30% plus the year. That's going to reduce overall drawdowns. And that is an insane improvement when you're looking at models that we currently execute off of. Imagine adding a 30% year gain to that. Let's see what we could do in 2025. So let's take a look at Cardano as well. Cardano in this long position right now. And let me just jump into real time. I mean, we're starting today. We're in a position we can't do anything. That seems like something that we would have for sure nailed. We didn't, so it doesn't count. But I believe that we would have. And just for a little bit of focus of where that would be, my entry would have come if we were doing this, right? Right above there, around exactly where the mouse is right there. And I'm going to go ahead and just see the difference that you're looking at. That's a big difference right there. So again, we'll continue in real time. There's no rush. Do everything right and get it right. Oh, I didn't pull up one for Solana. So we'll do the discretionary breakout off of this. And so I think a trade taken here would have stopped out. And then I don't think I would not have lined this up this aggressive. So maybe here on the 2 hour, we would have got it, but I'm not in it. We didn't do it. So I'm just standing aside, and we'll do it in real time in all of our sessions ahead. Love it, J-Core. It's because you guys fire me up. Oh, jumping back, and let me go back to stocks really quick and just check out how close we are to entries. And we can see we have an enter long pending on Tesla. And we're looking at just the CTM filter, FNGU. Could be Monday's Martin Luther King Day. Future markets close early. It's a stock market holiday, I believe. So that's a weird one for us in this situation. But it looks like both just CTM filter on I would not be surprised if by Wednesday we are even fully allocated 100% into the market, going from 100% cash to 100% into the market. Guys, do you understand the magnitude of what I'm talking about? Absolutely, absolutely beautiful. Everyone, have an amazing weekend. God bless you all, and I'll see you all soon.